Hi there, and welcome to another edition of Ask Spurl CPA. Today we're talking about contractors versus employees, and I have Yahweh here again with me to help discuss this topic. The quote that I'd like to start off with is, Michael Gerber, the author of our favorite E-Myth. The fatal assumption is if you understand the technical work of a business, that you understand a business that does that technical work. And the statistic, one of our most used is 50% of all businesses go out of business in 5 years. And, roughly a third of these businesses go out of business because they run out of cash. So the story that we have are business owners, they come to us, after they've been crushed or they're about to be crushed financially by retroactive payroll remittances, penalties, and interests because their contractors are going to be deemed as employees by CRA. So Yahweh, what are the important questions that you think these entrepreneurs should be asking?
Okay, well, I do like this one. Why do you say hiring an incorporated contract is a lot like smoking?
So, business owners, they'll come to us and say that, I've been doing this for a year, or I've been doing this for 3 years, or I've been doing it for 5 years, or even 10 years. And they'll say, I haven't had a problem yet. Mm-hmm. And I say, well, what if someone was smoking for, a year or 3 years or 5 years or 10 years? And they're telling you, I haven't had a problem yet. The problem with that is that eventually it catches up to you. Mm-hmm. And when it does catch up to you, the results are often catastrophic in nature. Or they can be catastrophic in nature. So just because you've gotten away with it for a few years, or you've got a friend who's gotten away with it for a year, that is a very small sample size. The odds are not great on this issue for you, and it'll work to a point until it doesn't. And when it doesn't, they're going to go back, not just go forward. And those results, the financial implications of having to go back and pay those amounts, are often catastrophic, or completely end of days type of thing for that business, if not at least a really challenging time.
Right. So how can big successful companies avoid this issue altogether?
So big successful companies, though, that a lot of the time they'll realize is you bring someone on as an employee, CRA loves that. They're going to get their share of tax, and it's really easy. And then they realize also, if you bring on an incorporated contractor, CRA kind of doesn't care about that either. They're going to accept that relationship as well. All the risk is when you hire an unincorporated contractor. So employee, no problem. Incorporated contractor, no problem. Unincorporated contractor, here's where all the risk is. So big companies who want to spend their time on bigger and better things and not having payroll audits or rulings, as they call them, done, they just say, forget it. We're not going to hire unincorporated contractors. So if you're out there and you're worried about this issue and you want to spend your time on bigger and better issues, you can follow one rule and not watch the rest of this video, is don't hire unincorporated contractors, because all the risk is hiring unincorporated contractors. You hire them on as employees or contractors who have their own corporation set up, all the risk then is passed to them, right? So it's all the risk is hiring unincorporated contractors. There's a lot of big successful companies out there who've completely just obliterated this issue by refusing to hire them. So
why do you think entrepreneurs have a natural false sense of security on this issue?
So I'll attempt to dive into the psychology of entrepreneurs. And I think a lot of entrepreneurs, if they're successful, they're wired the right way because they're good at influencing people. Mm-hmm. They have to influence their employees to stay on task with their problem, vision, and mission. And they're good at influencing their ideal and likely buyers to purchase from them. So they've been online and they've read a couple of considerations on if you're a contractor or if you're an employee, and they think if you make a really passionate, logical argument that they're safe. It's no problem. The problem is that anybody can make a real good, passionate, logical argument on both sides of the fence of this issue, and it's probably not going to. The actual ruling process is not really going to go down the way they think it's going to go down, right? They think if they can come into our office and make a good argument, that somehow CRA is going to have to buy into that argument. And if not, they're going to have opportunity to close and close and close again. That's not how it's going to work. So,
well, how do CRA auditors see entrepreneurs, and what will the process look like?
So yeah, that same successful, well-accomplished entrepreneur who's used to being able to persuade people, the CRA views them as a vacuum cleaner salesman going door to door. Their sole job as the CRA auditor is to do this ruling over and over and over again. It's like you're a telemarketer, or you're the king from a Nigerian country who emails you and wants your account details. They just see this over and over again. Entrepreneurs making the argument that no, these people who are working for me are in fact contractors and not employees. And the process is going to go vastly different than most entrepreneurs think it's going to go. Like they're going to call up and they're going to get some details, and sometimes you don't know that they're calling on this issue. They're just going to call and ask to speak to the people, and they're going to see the person on the phone who's a contractor, who is the receptionist in the business. And they're going to gather details, and they're eventually going to gather it in writing, or they're going to do a phone interview or an on-site interview, often with the owner, and they're also going to isolate a couple of the so-called contractors and ask them the question. So it's not just what the entrepreneur says or even the accountant says. Lots of times they're going to get to the actual contractors too, and there's really no way around that sometimes. And what they're going to do is they're going to sit there with their clipboard and they're going to say, yeah, you're making your big passionate speech about why these people are contractors. Yeah, got it. Okay, I got it. Well, here's what I'm going to do. I'm going to look into this issue and I'll evaluate all the facts and we'll get back to you. And then they're going to send them back the thing and saying that, no, these people are employees. Please pay us $78,000. And that's how it's going to work. And they don't care about your passion about this issue. They're going to send that to you in writing, and they never have to speak to you or hear from you ever again, and they're going to move on to the next file tomorrow.
Okay.
And their sole job is to, be very judicious on who they accept as a contractor, because ultimately CRA wants employees, because that's where they collect their taxes from.
That's right.
So it's a very heartless process. And they're going to sit there and agree with you. They're not agreeing with you. They're just getting on to the next question. They've already heard what they want to hear. And then they're going to submit their ruling to you in writing, and you're going to have to pay the bill, no matter how passionate that argument is. So that's what that process looks like. It's kind of disappointing once business owners see how that looks.
Mm-hmm. Okay. I think you touched on this a little bit. What will normally happen if contractors are deemed employees?
Yeah, they're going to have to go back, and they can collect tax. So they can, say that we have to pay the withholding tax. Generally, they're not going to go after the withholding tax. They're generally going to go after the CPP and EI. So all of those employees that you haven't been paying that you've been paying as contractors, when CRA really views them as employees, they'll say, hey, we don't just want you to change this moving forward, but we want to go back a year, 2 years, 7 years, and you have to pay the CPP and EI that you would have deducted from their checks. Which, I mean, and they're going to ask for both sides. So the employee and the employer. So even the CPP that you could have deducted off their check if you were doing it right the first time, or the EI you could have deducted off their check, they're going to ask for, for both of it. So that could be, $5,000, $6,000, $7,000 an employee, plus penalties and interest, times by the number of years, times by the number of employees, times by the number of years. So you can just start to say, okay, $7,000 an employee times 5 employees over the last 3 years. You start to get a real big number that this comes out to, and it can be, really ugly.
Mm-hmm. Ooh, that's scary. How do the amounts involved contribute to the risk factor?
So we have to be, I always recommend clients be pragmatic about this, right? Do you have one contractor who you're paying a few $100s a year, and maybe there are some risks, maybe there is some question of whether they're a contractor or an employee. There's also risk of running payroll too all the time, or how integral is this person as well. So you really have to be, I think you have to be pragmatic too on evaluating this risk. Am I driving 63 kilometers an hour in a 60 zone, or have I just gone on a big grand theft auto mission and stole a car and drove it through the airport? So I mean, it's like that with the amount. So you got to look at this. What's the aggregate amounts that I'm paying these contractors, where there's a risk factor. Is it a couple $100 of payments throughout the year? Even the CRA auditors will usually turn a blind eye to $500. They usually have a $500 threshold in their audit procedure for contractors. So you got a couple $100 a year. What's the big deal? But if you have several, thousands of dollars, you guys, $50, $60, $100,000 a year in payments to unincorporated contractors, and you've been doing it for years, that's when your risk starts to get high.
Well, in your experience, is the risk of profit and loss an important factor?
It's probably the single most important factor. So what they're doing is, there's a lot of considerations on questions, specific questions they're going to ask. So you have your own insurance, do you have other customers? But what is their risk of profit and loss? When you legitimately operate a business, usually if it goes well, you profit. And if it goes poorly, you have the chance to lose money. And they look at these, so-called contractors and say, is there a risk that they could actually lose money doing this? As strange as that sounds, is that's one of the, the most important risk factors. And so all of those questions lead back into that, that rationale is this person a legitimate business owner with a chance for profit and a risk for loss, or do they simply just get paid a flat amount per hour or a flat amount per service, and there's never a way that they're gonna lose money. They never have to buy any equipment or supplies or pay anybody else. So
okay, well, in your experience, then, is control an important factor?
Yeah, control's probably number 2. So risk of profit and loss is 1, and then control's number 2. So what's going on with this so-called contractor? Are they responsible for their own training? Do they train themselves? Or are they sitting in your staff meeting every Monday? Can they hire a replacement to do their job, or are you insisting on that particular person doing that work, much like you would with an employee? So we go with the order of it's the risk of profit and loss, and then followed by control.
Okay. What sort of questions will the auditors ask?
So they're going to drill it through things like does this person have any other clients? Do they the list of questions is huge. I mean, I can pull a list of questions from an audit, and it's probably 50 questions long, but some of the bigger ones are does this person have other customers? Do they have their own insurance? Are they responsible for what costs? Are they responsible? Are they buying materials? Are they buying supplies? Can they hire a replacement? Is huge. It is huge, right? And they dive into the training of who's training them. How is the hours and the schedule set? Are you setting that schedule for them and the hours? Did they bid on the project to begin with, or did you just tell them how much they were making? Did they get an opportunity to tell you, state their price, and then you say yes or no to that price, or were you like, this is the price, take it or leave it type of thing? So those are the type of questions that they're going to ask, and it's all the questions are pretty much going back to what's the risk of profit and loss for this person, and what level of control do you have over them?
Okay. Why are pay increases a good time to reevaluate risky contractors?
So, I mean, you might know you have a risk, and you see this risk, and you want to start getting rid of this risk and eliminating this risk or reducing the risk level. But at the same time, switching people from contractors to employees, sometimes it can be extra costs, and sometimes it can be not well received by the people who have been contractors for a significant period of time, and now you're changing the rules of the game on them. So what we've seen is, when there's an opportunity to reevaluate their pay, they're getting a raise. So once they're, due for that incremental increase, that can be a time where you can move them and change their classification from contractor to employee. And it's well received because they view it as their raise rather than, you're changing the mechanism that they're paying them. So that can be an opportunity. Obviously, you still have the risk for as long as this person's a questionable contractor, and now they're, until they're an employee or until they're incorporated. You can also tell them when they're due for a raise that say, hey, look, here's, if you want to make more money, you have to incorporate, or I'm not going to pay you anything else, right? That tends to go over a little better than just telling people, I want you to incorporate and incur that extra cost of incorporation, but I'm not going to pay you anymore. So if you can do it in conjunction with a raise, sometimes you can not rock the boat as much as if you just do it out of the blue. So So I think that's what we have here today for this episode. Thanks again for tuning in. Please hit that like and subscribe button, and leave any questions that you have below, and we'll try to address them in any future videos. Thanks very much.